Wall Street ended lower today, and the market mood was simple. Fear came back fast. Stocks fell because investors were no longer sure that the tension between the U.S. and Iran would cool down soon. As that doubt grew, oil prices moved higher, and that immediately put pressure on the whole market. Higher oil means fresh inflation worries, and that is the kind of headline traders do not want to see when markets are already nervous. The turning point came after President Trump said he could not promise that a deal with Iran would be reached. That comment pushed the S&P 500 down toward its lowest level of the day, and the selling got even heavier as investors moved away from risk. A weak U.S. Treasury auction added more pressure, because it reminded the market that borrowing costs are still an issue. By the close, the S&P 500 was down 1.7% and hit its lowest level since last September. This was not just a small dip. It showed how fragile investor confidence still is when oil, inflation, and geopolitics all start pushing in the wrong direction at the same time. Tech was also weak. Meta and Google faced pressure after a social media addiction-related court ruling, and chip stocks fell on worries that new AI efficiency technology could reduce future demand in some parts of the semiconductor trade. So this was not only an oil story, it was also a risk-off day for big growth names. One line explains the market today: when oil goes up and certainty goes down, stocks usually struggle. There were mixed signals later in the session. Reports said Iran had responded to a U.S. ceasefire proposal through mediators, but the gap between both sides still looked wide. Trump also said the U.S. would keep striking Iran until a deal was done, which kept traders on edge. Then, after the regular session ended, another headline drew attention. Trump said the U.S. would pause attacks on Iranian energy facilities for 10 days until April 6th at Iran's request, and said talks were moving very smoothly. That gave the market a possible relief angle, but for now, investors still need proof, not promises. That is why today matters. The market is not only watching war headlines, it is watching what those headlines do to oil, inflation, treasury yields, and risk appetite. If tensions cool, stocks could stabilize. But if oil keeps climbing, pressure on equities may continue into the next session. Tomorrow, investors will also watch U.S. consumer sentiment and inflation expectations for another clue on how nervous both consumers and markets are becoming. Don't forget to like and subscribe for more daily market recaps. This is Wilson.